Welcome to WorldatWork TV. I'm Alison Avalos, and I'm joined today by Kerry Chou, and we're here to talk about the recently published WorldatWork Salary Budget Survey, which is in its 43rd year, that primarily focuses on the amount of money that organizations are planning for pay increases in the upcoming year, as well as some peripheral information that's really important to kind of that pay budgeting cycle for organizations. Kerry, this year's data for the third time in a row, focusing on the U.S. first, we see a continuing trend of a 3% increase year over year. So 2014, 2015, 2016. And budgets are projected to grow by 3.1% in 2017. So there's a bit of a ho-hum story there, Kerry. We've talked for many years about recovery from the recession. We saw stark declines 2008 through 2010, steady climb since then. But really things have started to slow. And we've predicted in recent years, we've talked a lot about some of the economic factors at play, the role of unemployment, and as that falls, perhaps we'll see a boost in the amount of money that organizations are planning for pay increases. We haven't seen that come to fruition yet. So I think what we're seeing is really the impact of low inflation on these numbers, even with some of these other indicators moving in favorable directions. We're just not seeing that boost in pay increase budgets.
Right, Allison. When we look at inflation, it's been sub 1% for the past 2 years, and this year it's tracking at about 1%. Inflation is a great indicator of kind of how much heat is on the economy, and the Federal Reserve economists would like to see inflation more at about a 2% rate. So we're just really not seeing a lot of sort of fire in the belly from an economic standpoint, that there is a lot of action going on that would lead us to believe that the economy is really starting to pick up. If we look at things like GDP, we're kind of seeing the same story. Estimates of this year were that was going to be in about 2.5%. We're only seeing about a 1.2% GDP growth so far. And so although we have a very much improved unemployment picture, 5% dropping a little bit below 5% at times, and that's a great story. But if we look at other things like the labor force participation rate, that continues to drop. So we have people that are simply not in the game at all, and those people that have sort of given up looking, or for whatever reason are not interested in working or able to work, they no longer show up in the unemployment rate because they're not actively looking. So, it is definitely a mixed bag. It continues to be a mixed bag, and we've been carrying this bag really for the last 5 or 6 years, and these opposing statistics, and even statistics that waffle from quarter to quarter back and forth, just causes uncertainty, and organizations are cautious about increasing their fixed costs.
Kerry, we're operating in an environment right now in the compensation space where most organizations are dealing with changes to the FLSA and new salary thresholds. We did ask our participants if those anticipated changes, which weren't final at the time that we surveyed, but if those anticipated changes were affecting what they were budgeting for salary budgets for 2016 as well as in the future to 2017. What did we find?
Yeah, we found the vast majority of organizations indicated that they were not going to adjust their budgets either upward or downward as a result of the anticipated FLSA regulations, which of course have since come out. I would say that the FLSA regulation changes are having a significant impact to some industries, while in other industries less or really not much at all. So the makeup of specific industries' workforce is having a major impact on how much of a potential cost increase or change in the workforce is going to have to be made as a result of that. So at least at the outset, though, it doesn't appear that these changes or this change had a major impact. We'll sort of monitor it this year. Of course, the first implementation or the first adjustment won't occur for 3 more years until 2020, and so we'll have to take a close look at it at that time.
So as we talk, though, Kerry, about how salary budget increases are a bit anchored down by things that we're seeing in the economy, and we've got this very slow but steady trend when you look at overall averages, there's actually a little bit going on below the surface, and something we've seen consistency in variance below the surface when you dive into demographics like industry. We've seen historically over the last 8 or 9 years, every industry is kind of on its own trend line, which is unique for this type of data, because typically you would find that your overall averages sort of set the line, and then you see most regions, most industry breakdowns. Even when you get into demographic looks by organization size and the number of employees and revenue, you still see kind of the mirroring of that national trend, where the industry picture looks quite a bit different. And we see again the same this year with industries like mining and public administration almost opposing what we're seeing on a national level.
Yeah, Alison, we are seeing some real significant changes if we look at, as you said, mining and gas. It used to be at the top just a few years ago, the top industry, and they of course were booming just a few years ago. And this year they have really gone down significantly and are by a wide margin the lowest industry out there. So certainly they've taken a big hit. Now conversely, we've seen some interesting sectors rise to the top. Public administration, for example, which a few years ago, as you know, was towards the bottom or even at the bottom in terms of increases, and they are one of the top industries to see increases. So that is good news. If we look at the construction business as another industry doing very well, one of the highest percentage increases.
One of the questions that I think we're starting to see come up more and more is kind of about the bigger picture with regards to annual budgeting practices, any shift between base pay and variable pay in terms of leveraging to reward those top performers and keep that key talent within organizations. But also, I think what's starting to blur the lines or just create some more interesting conversation, if you will, is the role of changes or early changes that we're seeing with regards to performance management. WorldatWork and others have been talking a lot in the last year about a new focus on changes in some of those traditional practices, some emerging practices, moving to ratingless reviews, more frequent check-ins, some of those types of practices. And we're really just at the beginning stages, I think, of that transition based on what we've seen in the salary budget survey as well as other research. But I think it's interesting to start the conversation now and be thinking about, as an organization, how you're leveraging base pay and variable pay, which we know variable pay has been common for many years, but also kind of I'm wondering if we're going to start to see a shift in the amount of money that's put into those base pay programs versus variable pay programs, if that mix will start to look differently as organizations and really the pressure shifts to the manager to ultimately determine the best way to use those funds.
There has been a lot of talk about perhaps making changes to, you're going to get an annual increase and you can sort of take that to the bank. There's been talk about making some changes between base pay and variable pay. At least at present, we are still seeing a very high percentage of organizations maintain an annual merit pay increase. As we've already talked about, that budget has been pretty flat over the last few years. We are seeing some increases in bonus activity, such as retention and sign-on bonuses, so that bodes well for employment going up. We've even seen some recent Department of Labor, Bureau of Labor Statistics data that indicates that wages may actually be starting to creep up at a little bit faster rate. Now, the salary budget survey doesn't show that yet, and perhaps it might show that next year, but as you well know, we've been sort of saying that maybe next year will be the year. We've been saying that for many years now, and so a lot of A lot of people out there are just a little bit, I'll believe it when I see it. We keep talking about projections going to be higher next year. And so far, when next year has come around for at least the last several years, it hasn't come to fruition.
Well, I agree with you, and I'm personally not convinced we're going to see levels reach those pre-recessionary numbers. Perhaps because of the change in the landscape and how organizations are using rewards and where they're choosing to put their money, but also the role of a variety of other types of rewards practices, flexibility, some of the other ways that organizations are able to really connect with what an employee needs and present them with this full buffet of options that are really tailored to their individual needs. So we're definitely seeing, I think, a change in the landscape. We don't have any signals that the annual practice of kind of going through this exercise to benchmark your pay programs, to look at what others are planning for pay increases, and to still commit and dedicate funds to those practices. That seems consistent. I don't personally see that changing anytime soon, but certainly going to be important to watch the mix and the use of these programs.
As the bonus activity that I mentioned before, we're seeing some upticks there. We don't get a huge sense, though, from other labor statistics that we're looking at that quit rates, unintended or turnover that we don't want, especially high performers and so forth that leave the organization to go elsewhere. We're not seeing huge increases in that kind of activities. As many things are in the economy, it's kind of market driven, and until organizations see that need where they either can't attract or they can't retain their employees, most likely we're going to see more of the same for at least the immediate foreseeable future.
Thanks, Kerry. For more on the World at Work Salary Budget Survey, please visit our website. For World at Work TV, I'm Alison Avalos.